Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to share with you a little known but fantastic tax strategy for freelancers, digital nomads, sole traders, etc., who are interested in moving to Portugal. So I'm going to talk a little bit about what people normally do, why it's a bad idea, how this is much better, how you can get a comparatively low tax rate. I'm going to cover the situation with socials, which is sometimes an issue, and yeah, hopefully save you a bunch of tax if you're looking at relocating to Portugal. So let's dive in. Before we do that, if you haven't already, please hit the subscribe button, hit the notification bell. I really appreciate your support. Go and check out our other videos. We try to produce great content for you every single day. If you would like help with international tax optimization, protecting your assets, setting up companies, figuring out where to go, getting residencies, getting citizenships, the strategy or the execution for yourself or your business, please reach out to me. You can book a call, calendly.com/Michael-Rosmer. There's a link in the description below, or send a message through our websites, offshorecitizen.net or offshorecapitalist.com. Okay, so here's the background. If you go to Portugal, you can often end up with something called the non-habitual residency regime. Now, I've done some other videos on that. You can go and check them out. However, that's great if you're earning, say, dividend income, royalties income, but if you're having earned income, you're actually making money from work, maybe you're a contractor of some sort, etc., then it tends not to be that great. There is a reduced tax rate, so just kind of some quick background. The maximum personal tax rate in Portugal is 48%, and then you add a bunch of other stuff, so that's really high, and their threshold is like 80,000 euros a year. So it doesn't take much to be in that top tax bracket. By contrast, if you look at the NHR program, they have a 20% tax rate. You might say, okay, well, 20%, that's pretty good. But it's actually not. And the reason it's not is because there is socials added on top of this, and the socials will be like 34%. So that's pretty bad. And so I'm going to tell you the solution to your ills in this regard, give you a great solution, especially for people who are first moving there. And this is something called the simplified regime for sole traders. Okay, so generally speaking, this doesn't apply to everybody, but if you're somebody who is a digital nomad, who is, like some sort of a remote worker, somebody who is maybe you're like a consultant, this is people who don't have a lot of fixed expenses, okay? So for example, this is not good for somebody who would be, say, running a shipping business or doing an affiliate marketing company or something like that. But for people who are actually doing work, there's some sort of a consultant, and what I mean by this is basically the majority of your income is your profit. Okay, so you don't really have much in terms of expenses to go along with that. I guess I said fixed expenses, but actually it's also variable expenses. The bottom line is most of what you bring in, most of your revenue is your profit. Okay, if you're in that situation, this works out quite fantastically as compared to some of the other alternatives. And I've talked about a similar program in Slovenia. You can go and check out the video I did on that. But how does it work here? Here, and actually Bulgaria also has a similar thing. So yeah, lots of programs like this in the world that people just seem not to know about. How does this work? The way this works is so long as you're under 200,000 euros a year, which is a pretty reasonable threshold for most people, right? 200,000 euros, I mean, that's like, if I'm thinking about Canadian dollars, is like what, 300,000 Canadian dollars a year, 25,000 a month, it's pretty good, right? If you're talking about US dollars, around 250, 240, something around that. So yeah, pretty decent income for most people. So if you're earning that, then what is the situation? The situation is you can pay tax only on 35% of your overall income. Okay, so in other words, they assume that you had expenses equal to 65% of your normal income, all right? So let's just use an example. Let's say you earned 100,000 euros. They would assume that you had expenses of 65,000 euros and only tax you based on 35,000 euros. This is a big savings, huge. I mean, first of all, you're hitting those lower tax brackets as opposed to the higher tax brackets to some extent. And on top of that, you're in a situation where you are not having to pay tax on as much money. How great is that? So you're reduced, even on the top end, if you think about that, 48% reduction by 65%, you're starting to be in a more reasonable level for most people's standards. It is better than that, though. For instance, during your first year of residency in Portugal, you get actually a 50% discount, or your first year as a sole trader rather, you get a 50% discount on that rate. So essentially you've gone to effectively 17.5% of your income being taxed. In the second year, you have a 25% discount, so you save not quite as much, and then on the third year, you're normalized. Okay, so during the first year, amazingly good. Second year, pretty good. Third year, okay, you're in a situation that's at least better in most cases than the non-habitual residency regime. And the really critical area where this applies is to the socials, because what happens is the socials are applicable on your taxable income. Okay, and your taxable income is only this 35% that you would normally be dealing with. So as a result, the normal rate on socials is about 30, or just under 35%. That's reduced to about 12%. Okay, so 12%, much more palatable. Again, still not amazing, right? I'm not super excited about the socials in general, but 12%. On top of that, the socials are based on the previous year's earnings. And so in the first year, you're not actually subject to socials at all. So this is pretty good. So yeah, this is for those of you who are interested in relocating to Portugal. You are a sole trader, a digital nomad, some sort of a consultant, something like that. This might be a really great program for you, certainly better than the normal 20% under the NHR. Obviously, not good for if you're making, €1 million a year or something, but if you're under that 200,000 euros a year, this can often be the most tax efficient way to live in a country that a lot of people would like to live in, and leads to pretty good citizenship relatively quickly. So I hope that helps. If you have questions, put them in the comments below. If you'd like help with this, if you're looking at relocating, you're figuring out what's the residency program for you, what's the best way to plan your taxes as you relocate, or even you want to stay in your home country and you want to optimize your taxes, please reach out to us. Again, you can book a call with me, calendly.com/Michael Rosmer, link in the description below. Hit the thumbs up if you liked the video, share it with your friends. I really appreciate the support. Hit the notification bell on the subscribe to make sure you don't miss out. And I'm going to look forward to seeing you guys on the next video.